Welcome to yet another EasyEquities webinar. Thank you all for joining. I go by the name Lesedi Mfolo. I am the EasyEquities Drip King, and I am not alone. We're here at this webinar to talk about all the hot stocks for 2022, as well as things to look at when you're looking to make that investment decision on your EasyEquities account. So I'm joined by my co-host, Kalo. Would you like to say hello to the Easy investors that we have on the line? It seems like Kalo's on mute still. Kalo?
Hi, Lesedi. Hi to the viewers and good day to the speakers as well. Back to you, Lesedi.
Awesome. So guys, we know that it's a really tough decision to make that investment choice. But what we can do is that we can bring the big shots from Financial Mail and from every different types of walks of life. So what we're going to do, we're going to introduce our Financial Mail speakers, the editor-in-large at Financial Mail, Mark Hassenfass, who is the OG of penny stocks. And then I'm going to introduce Julieta, who is the editor-at-large at Financial Mail as well, and the Stock Watch on Business Day TV, and she loves to rant in a personal capacity. So Julieta, are you there? Can I say hello to everyone?
I am. How's it, Lesedi? Thanks very much for inviting us both onto this webinar again.
Love it. And Mark, are you there with us? Okay. Seems like something's wrong there with Mark. So Julieta, I think it might be a one-woman show today with Taylor, and I hope
I really hope not.
Well, I think Mark will join us a bit later. But anyway, guys, to get formalities out of the way, if you have any questions, please drop it in the Q&A section and we'll do our best to answer your questions. If we don't get your question, remember we do have an EasyEquities support portal that answers all your questions, as well as a research portal if you're looking for any more research on a particular stock. And we have an Easy Does It podcast, which literally goes into the ABCs, the 101s about investing that you can always check out. And yeah, I think I'm going to hand over to Kalo now, and he's going to ask Julieta all the questions, and hopefully Mark will join us. And guys, I really apologize. I see here that my audio is bad. Sometimes technology does ruin everything for us. I don't understand what's wrong with these AirPods. Sorry, I'll fix it in the meantime while Kalo takes over. Sorry about that, investors.
So yeah, no, thank you, Lesedi, for the opportunity. And once again, Julieta, you know what, it's really great to have you with us here. Just to jump onto it, right? I mean, I'm pretty sure we've actually all realized how volatile the markets were in 2021 and also before. So just to have a bit of your insight as to what it is that you actually think is going to be happening within the market come 2022.
To be honest, I don't think we've seen maybe anything quite like the volatility that's coming. And I think I think easy equity investors have probably experienced that for themselves in quite a radical way in the last 10 days, or even since the start of the year. I mean, you've seen it in the big tech stocks. You saw what happened to Facebook plunging, wiping off $252 billion in one session, down 20%. You saw what happened to Netflix. Those are massive, massive moves. And I'm not sure that it's going to improve necessarily in the year ahead. So I'm not sure. I mean, look, there's some very volatile stocks in the JSE, so it's not just the US markets that I'm talking about. The JSE, we have seen our fair degree of volatility, although I do think, as usual, we take our cue from the world's biggest stock market being America. But you've seen some smaller shares which have flown under the radar for a long time, like Alphaman. And I think Alphaman is probably a share that maybe a lot of your investors might be interested in, having absolutely massive swings. It went all the way up, I don't know, what was it, $27, now it's back at 16. In a few sessions, it had extreme moves of 20-odd%. That's fairly unprecedented, and not entirely unprecedented, but I think volatility is here to stay.
But okay, I mean, I was actually listening to what you're saying right now, and you didn't really touch base on tourism, right? I'm pretty sure a lot of people want to know what's really happening within tourism And is there perhaps maybe an opportunity for investors to actually jump in, looking at the fact that, I mean, right now restrictions are being eased? Do you really think that tourism actually has an opportunity for investors at the moment?
Absolutely, and maybe at some point I'm going to bring Mark in, because Mark is much better and has a deep knowledge of stocks like Tsogo-san, City Lodge. I mean, I'm going to first refer to what they did last year, and Tsogo-san had an incredible year. I mean, if I look at if I go back to our first edition of the year, which was the Hot Stocks 2022 edition, Tsogo was up 139% last year. But then collapsed, as you would have seen, towards the end of the year when Omicron hit, and we had basically the travel ban slapped on us again. I suspect that you're going to see a big rebound as the world exits the COVID pandemic. I mean, I really think, I get the sense that is happening, that Omicron, because it wasn't as lethal as maybe the previous two waves, it was a lot more infectious, but maybe there's a sense that, you know, the pandemic's becoming endemic. People are just living with COVID and getting on with it. And we are seeing travel bans relaxed. We're seeing mask mandates relaxed. You saw New York City, they're further relaxing mask mandates. So this all speaks to a reopening of the world. And hopefully you're going to get shares like Tsogo-san benefiting, you're going to get shares like Sun International. Anecdotally, I heard that you couldn't actually get a place at Sun City over the December holidays. It was just rammed with people. It took an hour, you know, and a half to queue up for a Nando's. So look, I mean, that's a particular one-off, but if you get more of the Germans, the Americans, the English, who've kind of been prevented from coming to South Africa, I do think that's going to have a positive impact on our locally sort of tourist-focused stocks. Mark, I don't know if you want to jump in here.
Yeah, can you hear me now?
Yeah.
Okay, sorry about the tech problems in the beginning. I apologize, I'm on my cell phone now. Yeah, look, I think you're right. Broadly speaking, that is correct. What is important, I suppose, the shares that could rebound the most, I'd still say, would be the gaming shares. The problem there is, before COVID hit, they weren't in the greatest of space either. They were cash generative, making okay money. So to get back there is the first step, and then we'll have to reassess them. I suppose the one to watch is Tsogo. It's got a holding company, HEI, that needs the cash at center. So will they pay a dividend, or are they not going to pay a dividend? That's the big question. So that's going to be very easy to, very interesting to monitor. What I like in the kind of leisure gaming space are the limited payout machines and the electronic bingo companies. You know, I think they're very, very overlooked, and there is, I suppose, just one listing really. You can, if you buy Tsogo and Sun, you get them, but they also have like another casino in the portfolio. But RECM and Caleb at the moment is my kind of favorite. They've got the holding in Gold Rush, and that's got some excellent operations, especially in the electronic bingo side and moving to sports gaming and online gaming. And that one I like. I think it's very underrated, and they are doing well. You know, they don't have the capex or the maintenance costs of casinos, but they're like little mini casinos, and they do extremely well. So that's one to watch for me. I guess City Lodge is also interesting in the leisure side, tourism leisure side. A foreign buyer, perhaps. I mean, could that be? His recovery is going to be slow, even if people do come back. I mean, they've got to get occupancies up a hell of a lot. But a quality portfolio of property, I suppose, that's the one thing to always bear in mind. So those would be the ones I'd be looking at.
Okay, no. So from your point of view, would you actually say that tourism will be rebounding by within this year?
Well,
We hope so.
Yeah, I live in Cape Town in Kommetjie, which is it's the south end of the world, and we don't really get that many tourists because we're stuck away and the water's cold. This year, I've never, ever seen as many people in my life. And they were on the beaches, on the rocks, everywhere, in the restaurants. People came down. And hopefully that's a good sign. And if the foreign tourists come as well, then it's got to rebound, surely, anecdotally. Yeah.
Julieta, do you have anything that you'd like to add to it?
Not necessarily to the whole discussion on tourism. I mean, on City Lodge, I am in the slightly wary camp, because City Lodge is a particular kettle of fish, and I get asked questions on Stockwatch on my show all the time about City Lodge, and the worry for me is it's more along the lines of business travel, where I do think you're going to see a resurgence in business travel, and City Lodge was particularly focused towards the business traveler, but I don't think it's ever going to return to pre-pandemic levels, because maybe people will travel for the really important meetings, or where they really have to do something in person. But for the less important stuff, you're going to do it on a Zoom or a Teams meeting, and I think I really can't see that changing. I think it's a lot easier, and it's a lot cheaper for companies to not have to have these huge travel budgets. Okay, the other issue is that there was maybe a hope that City Lodge could rejig their hotels to be, to me, more kind of leisure traveler friendly. But the problem is that they're not in the best locations for leisure travel. They're in the kind of the business districts, so okay, Sandton, that's okay, I guess, if you want to do a lot of shopping, but they're not necessarily in locations that are incredibly leisure friendly. You would probably rather go somewhere else or stay in a different hotel. Maybe say you go to Cape Town, has a better view of the waterfront, or whatever it may be. So that I'm a bit worried about. And then Mark talks about the value of the property portfolio. The problem is that you've got a lot of property portfolios that are sitting with to let signs that have negative rental reversions. And what that is when rentals come up to be renegotiated, the power is not with the landlord, the power is with a tenant, who says, there's so much opportunity for me. There are so many properties on the market. I'm not necessarily sure I want to stay in this place. And the landlord thinks, oh my God, I can't afford to lose yet another tenant. I'll cut your rent by X. And so the property sector is still a tricky space. So if City Lodge, and there's an argument, there always has been, that they could sell off the properties and they would get, there's a lot of value sitting in those assets, but that value is diminished when everyone else is trying to do the same thing, and when there's a surfeit of properties on the market. So that is something to bear in mind. So City Lodge, I mean, I can see the thesis that why people would want to buy into it, especially seeing as it's so much cheaper than it's ever been, although it's had rights offers, there's more shares in issue, but I'm not sure that I would put my money there.
Okay, no. And since you actually mentioned that the market is actually going to be a bit more volatile than it was before, just to have your view on mining, what's your view on mining, more especially commodities, looking at the fact that inflation is going bonkers? I mean, prices are doing the things right now. So what's your view actually on market? What's this on mining, I mean?
Shall we start with Mark, and then, because Mark is something called the Hartenfuss reverse indicator, which is whenever Mark buys a mining share, you should probably sell it. But it hasn't actually been working. So I'm going to let him start. But it's apparently been working quite well. So I don't know. Maybe the world.
Mark, can we please have your view on that?
When it doesn't work well, that's a good thing. Yeah, look, I'm not an expert in commodities. I do like to dabble in the junior miners, and the HRI, or the Hartenfuss reverse indicator, it's a real thing. I've had terrible luck. I suppose what I've noticed is I've looked at shares like with Sizwe, the small platinum junior, so promising. A lot of things happening on project, on almost on time, everything going well. Then this unrest that happens in the last week just makes you worry. I mean, that spreads. It's not so good. The kind of SENS announcement with Sizwe put out was pretty dire. I didn't like it at all. I'm surprised the market didn't hammer the share more, but there you go. But then again, you've got kind of mining operations outside South Africa, like Alphaman, very interesting. Look, the share price there went crazy. It went, absolutely mad and totally disjointed. Should never have happened. But a good operation, if the share price comes down to decent levels, maybe 15 Rand again. Yeah, so you've got to follow the commodity prices, but remember those prices can correct as well. Changes things in small mining companies, the margins crimp, they can the prospects change very, very quickly. I prefer to play maybe offshore. Look at some of the more interesting plays. There's some really small juniors like Europa and a couple of others that I like. Gemfields, the old Pallinghurst. That's a very interesting operation with its gem and ruby operations. So that's a nice small miner to get into. But as regards the big ones, I don't look at them that closely. If I had to choose one, I quite like South 32. I like the way it's positioned. But the bigger ones, I'm kind of, I think they've had a really good run. So I'd kind of just hang off there for a bit.
I'm guessing you're actually more into explorers. You
I like to scratch around and find these little things. They can be very, very interesting. Merafe, has been one I've followed for years. It's always kind of conspired to disappoint. It should be a very good second half for them. I see the share price is still not factoring in the earnings that the market thinks is coming through, and perhaps the dividend. And that's again mining. People are banking on a big dividend because the commodity price is high for their respective commodity, but they're going to invest in new projects, and how much of that dividend flow is going to go into the new project. And I think that's what's in the share price. That's what makes it exciting. I mean, the Alphamans, the opposite. They paid out a very generous dividend very quickly and seem to be, confident of more. So yes, pinch of salt all the time and very cautious, but it's a fun place to be.
I mean, Kaylo, if I can, Merafe was one of the shares that I picked. So we were forced. Mark forced us to pick stocks amongst the FM writers for our top stocks issue. So Merafe I picked on the basis that there is this expectation of a big dividend. They have about a quarter of their balance sheets, a quarter of their worth, their asset value is in cash. And so there's hope that they're going to pay that out as a special dividend, because they only really have this one venture, which is a joint venture with Glencore. But, Kaylo, you mentioned inflation at the start of of this question. And I was talking to someone in the asset management industry who was saying that, inflation is going to be the big thing that you've got to bear in mind for this year. But where you're going to see inflation is in prices. It might surprise you in the prices that you see. And specifically in with regards to mining, it's going to be, as we saw in 2021, in prices like coal, where, there's this big ESG push, a move away from dirty fuel assets. So coal is one of them. And so there isn't money going to new mines, which then has this unintended consequence of making those mines that operate coal that much more valuable. And the mineral that they mine is then maybe in scarcer supply. And so that pushes the price up too, which is why you saw Thungela Resources have an absolutely phenomenal year last year against everyone's expectations. Anglo American spun it off. Because it was kind of the dirty old coal asset, and then Thungela trounced Anglo in terms of performance. Okay, so you might actually see, I think you might still do fairly well out of the big diversified miners. I might look at Glencore. It's got coal, seaborne coal operations. Also, it's also a trader. It's got copper assets. So if you do see inflation and you've got, these are still sort of maybe undervalued stocks compared to the high growth stocks that fall under the sort of tech basket, where their prices are coming down, and not so much the case for the mining companies. Mark, I was going to also say that maybe it's the ancillary companies that deal with miners that maybe is where we also need to start looking. Things like Hideko, for example.
And master drilling, and so I think you're right. I think Hideko probably it's a good company, number one, and exposed to other things other than mining. But yeah, absolutely. The one I quite like is master drilling. It looks like they're going to have a pretty good year. They're going to be busy. There's all kind of rumors of them actually listing maybe in Toronto because they'd get a better rating and raising some capital. So yes, we spoke about it last week at the FM. I wrote a story on Simbi, an above the ground miner. It reclaims metals and things. nice little company, good cash flows, I think quite cheap. So yes, I think if you scratch around there are some interesting ones. We don't have as many mining services companies as we used to in the JSE, but yeah, there are one or two around that are interesting.
Okay, no, just to try keep it short, because I mean, at the end of the day, I feel like we can talk about this the whole day, more especially looking at the inflation right now. Just to ask you guys a question on the stocks you guys mentioned, right? What are the key aspects that you guys actually look at? Especially looking at the fact that right now, I mean, there's this thing that it's more about value investing. So my question to you guys now is, what is it that you guys actually look at when you guys actually starting looking into this type of companies?
Mark, do you want to start, or shall I?
Yeah, I'll start. Let's just go to our, I suppose we talked a bit about the first cover of the year. So just to explain the stock selections we make there are sectoral in nature. So what we do is we don't choose our own shares. We go through the JSE sectors and choose one company out of each sector. So that is in itself quite difficult, because in some sectors you might well know are not going to have a great year, and it's pretty obvious. So you've almost got to pick the one that goes down the least. So it's a difficult exercise, number one. And to achieve the growth we achieved last year was astounded me. It was incredible. But having said that, yes, I mean, I'm definitely a value investor. I know that from my portfolio. So I do tend to look at things like a hard NAV and a tangible NAV behind a company. I'm very much check cash flows all the time. Operational profits must match cash flows, or at least come close, or there should be a really good excuse why they don't. I like to look at management as well. Solid, dependable management, basic people who know their business. I kind of think of guys like Chris Skitter at Astral. I mean, he knows he's in the chicken business. He's not pretending to be anything else, same as Andries van Heerden, guys who are good operators. Those are the three main things I really look at when I try and stock pick something.
And I mean, if you want to look at a company's cash generating abilities, you also want to look at companies that maybe are not having to spend huge amounts of capex, because if that's the case, your payback is going to be, it's going to take a while to come through. These companies have to spend money on developing assets, and that's not going to come to you in the form of a dividend. But that's not necessarily a bad thing. It means the company has a growth runway and they have a vision. So maybe that's the caveat there. But the other issue is just the commodity itself. And now sometimes it's lucky. Sometimes it's a lucky bet, and I'm going to use the case of Alphamin. You know, the tin price. So Alphamin, which I think a lot of easy investors are probably looking at, given its performance of the last year. Just 2 or 3 years ago, the tin price was much, much lower than it is now. And Alphamin was in a state where they've got this mine in the DRC. It's called the BZ mine. It's regarded as one of the richest tin mines, one of the highest grade tin mines in the world, single asset. So it's just one asset, okay? So that's the caveat. Now, they were looking at this at the tin price then, and the tin price was really, I don't know, maybe it was about $16,000 a ton, I think, thereabouts. And they thought, we might need to raise capital to do what we want to do at this mine. Now, you fast forward 3 years, the tin price is over $40,000 a ton, and suddenly the BZ mine is printing money. And the reason why there's been such a jump in demand is because tin is used in soldering, which is crucial for computing equipment. So that's the really interesting thing, and that's the thing. A fortune of a commodity can change really quickly. And you need to you've got to read as many reports as you can about which commodities, if there's a surfeit of them coming onto the market, then, all of a sudden, say everyone opens an iron ore mine because the price of iron ore is high, you're going to have to expect that there's going to be a lot of supply coming onto the market fairly soon. Once that happens, because there's a lot of supply, it's going to push the price down, and the companies that mine the iron ore, say, are not going to do as well. If there's a scarcity, it's going to make the price more valuable, which is what we saw with things like palladium and rhodium. which is why the northern of the world did so incredibly well, why you had this huge resurgence in PGM shares after they languished in like the Mariana Trench for years. And you had backers like John Bickard at Investec, who were absolutely adamant that these things are going to start paying off, and people didn't believe him, and everyone abandoned their PGM shares. They sold off their Implats, they sold off their Amplats, their Sibanias, and then the prices started rallying, particularly for palladium and rhodium, and these guys just printed money. So the commodity that's probably the single biggest change in the fortune of a mining company, is what happens to the commodity price. And I guess, that's what I would add there.
Okay. Can you guys still hear me? Yeah, no, I thought I'm actually on mute. Just to wrap up from my side, looking at the fact that right now, I mean, obviously the inflation topic is one of the burning topics that everyone talks about, right? And gold is probably one of the commodities that was expected to be doing the most, looking at even the companies themselves, like you mentioned, Juliet, that they usually fluctuate together with commodities, right? Looking at the current situation of inflation, right? What stocks would you guys actually say that these are stocks that you guys actually believe in, and that you think that it's more of like a hedge against inflation at the current moment?
Mark?
Well, look, if I buy gold shares, then please don't. But yes, and for the record, I don't have any gold shares. If you're going to have a sleepless night about inflation, take a punt. Buy a decent operation, Pan-African, very interesting little company. It's got a couple of problems, but it's generally well run. They communicate well with the market. You've got some really big mining companies. I don't have to name them, Harmony, Anglo Gold. By all means, have it. I mean, personally, I'm not going to chuck 30% of my portfolio into gold at this point. So maybe you should buy gold.
That's the HRI talking. I would suggest that you look for companies that don't have high levels of debt, because if we have persistent inflation, interest rates are going to rise. They're just going to have to rise. And so a company's debt is going to become that much more expensive. So be careful about that. I think companies, and be careful of the highly priced companies. They were highly priced. Maybe you could, the Netflixes, the Facebooks, because people talk about the discount rate. Okay, so in other words, if a company's earnings are far out in the future, they're investing, say, a lot of in the business in the expectation that earnings and profits are going to come down the line. And they've attracted a lot of capital in the last couple of years. And this is specifically, I'm talking about the tech stocks, the US tech stocks. They became very expensive. And why you've seen them sell off is because that growth is no longer sort of as assured when you have higher inflation and higher interest rates to go along with it. So it's a company with sort of a promise of almost immediate growth, which is often maybe a more boring company, like a consumer staples companies, like FMCG companies, like a Unilever or a Nestle. They're worth more when inflation goes up. So it might be the turn of the slightly more boring companies than the companies where the price was so high because the outlook for the future was so rosy, but you don't know what that outlook is going to be, and it's becoming a little less rosy, and it just means that maybe there's a greater pull to put your money in a bank where you can get some interest, rather than in a stock where the earnings aren't necessarily assured, which is why you have a bit of a switch.
Yeah, no, at the end of the day, I mean, looking at how things are right now, transitioning and whatnot, it's really going to become interesting, more especially within the stock market. Just the last one before I hand over to Lesedi. referring to transition, right? We were actually talking about coal, and for one, we know that coal prices have actually skyrocketed as well over the years. But now, in South Africa, looking at renewable energy, is there an opportunity?
I suppose there is. Look, yeah, I suppose the big renewable players are offshore. You look at something like Montauk, which I think Julieta picked in a stock picks for the hot stocks. And we've got, I suppose, we've got Renogen, which is doing its big deposit in Virginia. That share price is very steamy. I don't know. There must be space for it. We've had renewable solar energy companies listed in the JSE, Gaia, etc. Market hasn't been enamored with them. Didn't seem to buy the whole idea. Didn't seem to get the pricing right. There were some issues. So probably maybe look at the bigger companies overseas. And there's the one in the JSE, which has got a primary listing in New York, is Montauk.
Yeah, I mean, offshore, there's a lot more. I think it's a Norwegian company that actually has big operations in South Africa called Skatek Solar. It's a solar and renewables energy business. They did pretty well in the last round, but they're, as I said, they're listed in Norway. So if you can get access to stuff like that, you've got the big wind farms. Is it Ofsted? There's a. I did a story last year on kind of this green energy revolution, and Iberdrola is a Spanish company involved in the renewable energy space, which one of the big asset managers picked. Funnily enough, they also picked the guys whose names we shall not mention, like Shell, because the irony is that the Shells and the BPs and the Totals of the world have the most to lose in the green energy transition. So they are going to be spending a lot of money trying to get into the game, trying to bump up the renewable energy side of their business. So, I mean, it seems counterintuitive that you would, and personally, I'm not sure if I would invest in Shell. I don't like how they approach this, the whole wild coast seismic drilling issue. So they would not be on my list. But the argument is actually that these are the companies with the most to lose. They have deep pockets, and as a result of the high oil price of the last year, those pockets are deeper. They can spend money into renewable tech, and so actually, maybe that's how you hedge yourself by buying into those.
Okay, now, Lesedi, back to you.
Awesome. Can you guys hear me clearly? I've switched it up back to old school. Is there still interference? Am I distorted? Mark, I need your help here. Awesome. Old school's the way to go, I guess. So guys, you heard it all there. The experts came in, Kayla came in with the questions, but I'd like to circle back. And you guys mentioned a lot of companies, a lot of names, a lot of words that were mentioned inside what you guys had said. But for the interest of the investors, like the newbies and the people that aren't really sure what stocks to invest in, how to go about investing, what would you say to them in 30 seconds should be the approach when they see a new stock? And I'll start off with Kayla first, because I guess Mark and Juliet have had a mouthful to say, and I think they need some water. So Kayla, you next.
Well, I mean, I'm a person of quotes, so if there's one thing that I always say when you're investing is that where there are cents, rands can be made, right? Loss is limited to 100, but growth can be limitless. But one thing for certain, the future is filled with the impossibilities of today and tomorrow. And that's it.
And that was preaching. Thank you, Kayla. So Julieta, I'll go to you next. And what would be your 5 steps in looking at a stock? If you were a beginner, what would you look for before throwing your hard-earned money into that stock?
You got to read. So whether it's a SEN statement, Google a company, see what articles have been written about it. You've got to read. You've got to read through the income statements. You've got to read through the outlook statements. and then read articles. I mean, I don't want to kind of push ourselves here, but and I'm certainly no expert. Mark is actually far more of an expert than I am, but you know, read financial publications. So sure, I'd love you to all read the FM, but not just the FM. Read Fin24, read The Economist, whatever you can get your hands on. Business Day, obviously. Read and do as much research as possible so that you get a feel for what the company's about. Yeah, I think that's, you know, that's your basic starting point. If you're interested in any company, you need to know more about it. Don't discuss it with someone who said, oh, I've got a great hot stock tip. Go and read first. Get yourselves to grips with the, you know, the company's financial fundamentals, and then take it from there.
Yeah, and I agree 100% with what you said, Juliet. So I mean, I love the subscription, call it promo that's happening at Business Live. And it's 10 Rand for the first month to get a bit more knowledge on the stocks that are out there, and to get some more information on the stocks, and so you can make informed investing decisions. I mean, I use it from time to time. I recently read Mark's article on what stocks to buy in 2022. If you haven't read that yet, check it out. It is on the Business Live page. So just type in Hot Stocks by Mark Hassenfass, and you'll probably find it there. So Mark, what would your top 5 stocks be for 2022?
Jeez, put me on the spot now. Okay, I've explained before that I'm probably a value investor, so that's my style. So please don't scoff or laugh when I bring my companies through. They're not the most exciting, but I don't like to lose money. I'm too old. I just want to collect dividends and things. So, okay, so the one I like, probably my favorite stock is Caxton, which, I mean, people are probably rolling their eyes, but the management are not guys to waste money. They allocate capital fairly well. They don't waste it. You've got a fantastic holding in Impact, which you're basically getting for nothing. And these guys run a very lean and mean show. They look after your money. You'll get a dividend, and the share is very, very undervalued. So I'm happy to hold something like Caxton. I also like Distel at the moment because of the transaction that's going through. I think I'd probably be selling the main assets and keep the little whiskey assets they're going to let you keep in an understood environment. I think those whiskey and the gin assets are worth a lot of money. So to me, it's kind of a safe investment for this year. Yeah, I like in Simbi. I've just stumbled on that one. I think that's a nice little company. My worry there is, of course, this company is so cheap that I'm almost positive management are going to buy it out. So it might be short-lived, but at least I'm sure they'll pay a premium to buy you out. And then, you know, just I suppose my perennial favorites, I like the investment trusts, a heck of a boring, but Subvest, great company with great unlisted assets. You can't buy anywhere else except through Subvest. They spin cash. They're worth a lot of money, a lot more than the share price. Same goes for Remgro. Things are happening at Remgro. The Distel transaction I mentioned. RCL Foods looking good. Mediclinic, hopefully a better year. They've got some very nice unlisted stuff, and you're buying the share at a deep discount to the underlying value. So there's my boring 5, but that's me.
Well, I asked about your top 5, Mike, and Mark, thank you so much for giving us your top 5. And if you missed any of those shares, guys, this recording will be up on YouTube on the EasyEquities page, so you can always go back and find out what stocks Mark is investing in 2022. And then I'll bring it back to Julieta. I want you to name at least one share that you would put R1 million in today.
Oh my God, I can't believe you're asking me to do this. You know, I mean, I'm probably also a reverse indicator, okay? R1 million, what would I, oh no, it's just, diversification is the only free lunch, Lesedi. You can't do that. You can't take, that's like red or black in the casino. I don't know. I'm sorry. If you gave me 5, I'll give you 5. But
okay, let's go with 5. You said diversification is the key. Putting your eggs in one basket is not the way to go. So put your eggs in different baskets, and let's go.
Okay. Okay, well, I mean, I'm gonna okay, it's all tile. All right, I know it's you know, I started as a journalist in 2001, and the first company I wrote about was Italtile, and it was a quality company then. It's a quality company now. It has not shot the lights out, but it has been utterly consistent, and that's what you want as a longer term investor. Okay, I'm not talking about making a quick speculative buck. The management, partly because they've got a family holding in the Giovanni Ravazzotti, they've always had consistently good management. They've paid good dividends, and they're a good company even when times are bad. I think that's what you got to look for, is a company that is good even when times are bad, because they will get through those times. Okay. Transaction Capital, I think, is a bunch of bloody smart people. I know their shares were up a lot over the last year. But those guys are smart. They're, they will get a kicker the more people come back into, the taxi industry has actually been a bit depressed. And so I think, if there's any sort of rebound in economic growth, I think they're going to do well. And they've got other strings to their bow, debt collection, which they do very well. And they're doing little expansions abroad. So I would add Transaction Capital to my list. I'd add Glencore. I think they just very also smart operators, got good assets, got the right assets. I'm quite confident on mining stocks this year. I wish I had bought Purple when at 35 cents. And I do believe that Purple Group, which of course owns EasyEquities, and I'm not blowing smoke up your asses, is a company with a vision, but I think maybe your shares have run ahead of themselves. But I would not bet against you taking this to being a 5 Rand stock. But I think maybe this is your breathing year after a frenetic run. I guess if I could get Alpha Min at a cheaper rates, I think I might actually take a little dabble there. I think if the tin prices continue where they are, I think they're going to do really well. But I'm really sorry that I can't give you any one particular share. Geez, you put me on the spot there, and I failed in this mission.
No, it's all right. You actually passed it very well. I mean, a lot of the investors on the Zoom call also said diversification is the way to go, and not just one share. So my bad. And so, Kalo, you're up next. So I'm not going to put you on the spot. You have 5 seconds to think about what I'm actually going to ask you. I've looked at the top 5 shares bought at EasyEquities. So in our top 5, guys, we've got Sasol. We've got the Satrix NASDAQ 100 feeder portfolio. Sorry, that's an ETF. And then third, we've got the Easy Crypto 10 bundle, which is a crypto bundle. And then fourth, we have Purple Group. And then fifth, we have Steinhoff. So I'm going to ask you, Kalo, when it comes to Sasol, hits or a miss, would you invest or wouldn't you invest? Yes or no?
I'd miss.
You'd miss. And Mark, would you invest in Sasol or would you miss?
I'd miss as well.
And Julieta, would you miss or would you invest in Sasol?
I wouldn't. I think the money's been made. I think I don't necessarily oil prices staying here.
Okay, cool. All right, I got it. Okay, so next we'll talk about number 2. It's the Satrix NASDAQ 100 feeder portfolio. Julieta, starting with you, would you hit or would you miss?
I might miss this, funny enough. I think I might rather go for boring. I feel like the NASDAQ's got too many overpriced tech assets that are going to see a moment of reckoning. And so I think I might give this a miss.
Okay, and Kalo, would hit or miss Satrix NASDAQ 100?
Yes, I mean, that is...
You got 5 seconds to answer the question. The users are waiting.
Okay. Nah, I'd go in long term. I'd go in.
Okay, we've got 1 in and 1 out. Mark, you're the deciding.
Not at this point. Definitely not.
Okay. All right, awesome. And we also, at the beginning of the year, just like the stock market, a lot of things went down. It was a hard time, and we saw a hard time for crypto as well. Mark, what's your take on cryptocurrency, and would you invest in cryptocurrency?
I've got a very, very small holding in crypto, and that is at the behest of my children, who just hucked me until I took a position. And it's not very big. I sometimes look at it and get excited. I sometimes look at it and want to weep. I don't know how to read the market. I'll be honest with you, it goes up and down, and not necessarily in that order. It's crazy. But I'm there for the sake of it. I suppose I'm banking on it having some kind of future, and I'm just having some kind of hedge, and it keeps my kids off my back. That's my real reason.
Well, I mean, if the kids are off your back, you must be a happy man.
Absolutely.
And Kalo, would you say the EC10 crypto bundle for you is a hit or a miss?
Well, for me, it's a miss because I mean, I think I'm a person who actually loves volatility. So, penny stocks are my thing. So,
Awesome.
so on that one, I think I'd actually miss.
Okay. And Julieta, would you invest in the EC10 bundle or not?
I think if I were using my head, I would. But my heart says no. I don't believe in it. I don't understand it. Mm-hmm. To me, it goes up because it goes up. It goes down because it goes down. And that to me is a nonsensical asset class. It makes no sense. I don't understand the backing of it. Blockchain technology, okay, but having all these computers mine impossible mathematical problems in order to mine a Bitcoin, say, just strikes me as nonsensical. But like Mark, I think it's got enough of a following also from smart people, although like Warren Buffett, says he doesn't really get them. So I'm happy to be in Buffett's camp. But so maybe with my head, I would buy, speculative punts, but my heart, my heart would not be in it.
Okay, awesome. All right, I'm going to circle back to Mark because we got your opinion, Julieta, about Purple Group and what you think the share price did. So I'd like to ask Mark, what do you feel about the number 4 stock on EasyEquities, Purple Group? For you, is it a good stock to invest in? What do you think is going to happen with the share price? Any 2 cents that you'd like to share with regards to Purple Group?
Okay, let me say this. I personally have used EasyEquities for a long time. That's not a punt. I just have. I found it very, very easy to work off. And I like the functionality. I like the attempt to democratize the stock market. I love the fact that you're getting retail investors in. It's great. That said, the share has run. It's factoring a lot of growth, a lot more retail investors to join. My worry, of course, is, and as I've said, I think the platform is fantastic. It's going to be around forever. It's a great product. If the market shakes up, and I've seen this, I've been through a couple of cycles. So you guys still with me? I've got a call there. Sorry.
Sorry.
So if the retail cycle shakes out and the retail investor gets shaken out of the market, they go quickly and they get hurt. They don't often come back that quickly, and that happened in the late 90s, remember? And there were a couple of then online brokerage that started. I think Purple is more robust than that, obviously, but it's my worry in the short term. I think long term, fantastic company. And I'll tell you, if the shares ever go down again, I'll be buying big time.
Awesome. And Kayla, I wouldn't ask you because obviously you're biased and you invested into Purple Group just the same as me. So the next one that's a pretty controversial is Steinhoff. Guys, is it a hit or is it a miss? The floor is open to either you or Mark or Julieta.
Well, actually, funnily enough, I feel like I've got to run to another room, but I'm not going to be able to do that. But our cover story this week is on Steinhoff. And to be honest, it's written by a master journalist, Rob Rose, who's our editor, who's written a book on Steinhoff. He's probably, he's covered this since, its apparent demise in 2017. And it's a fascinating read. Talking to Louis Dupré, the CEO, talking to a whole bunch of other people about this company that we wrote off for dead. We said this company is not going to come back. It's finished. It's got too much debt. It's got huge liabilities, these legal claims against it. And yet Louis du Preez has pulled off what I'm not sure many people in the world have done, which is a settlement where basically litigants against it who said that they, were swindled into the whole Steinhoff scam, essentially get 20 cents out of the rand, which is really not bad. And they've got a huge amount of debt on their books, but they still have good operating assets. They've got Pepkor, they've got Mattress Firm, which is listing, they've got Pepco. If these companies can do the right thing, if interest rates, okay, that's maybe another caveat, stay low, because they've got a debt standstill agreement. If these businesses can actually bring in the earnings, which they are doing, and if they can maybe sell off a few more stakes, lighten up their loads in their underlying assets, you could actually see them a situation where they can get that debt under control. And this is a company that maybe in 5 years could be a lot stronger. I mean, they spent almost 5 years, 4 years, sorry. November 2017, December 2017 was its implosion when the news of its huge kind of fraud hit the market. So we're 4 years later and it's still standing. And they've they've got themselves to almost a starting point for a new phase. The debt is the issue, but if they can get that under control, maybe this is something that you would want to take a flutter on.
Awesome. And Mark, what do you have to say?
Let me just say this, and I hate to admit this, but one of my most successful investments, if not my most successful investment, was in African Bank preference shares. I literally bought them minutes before they got suspended, and then I sat for months with this worry. But I'd kind of figured out a valuation, and when they got relisted, I sold, and I made a fair turn on those. So I do like looking at the left for deads and things. I have looked at Steinhoff. I honestly say this to you, I don't understand Steinhoff. I still don't understand them. As Julieta says, there are some great assets there. They're familiar to everyone who's been around. They've got great assets. But working out the central debt and what they're going to sell to cull that, what will you be left with? Will you be left with a decent enough operation? What's the value of that? I just cannot get a number. I can't get close to a number. I can't wait to read Rob's article. I must be honest, I'm so excited to read that, to see what was his book was brilliant. So I'm very excited about that. But for the time being, a bit of speculating, and if you wanted, maybe speculate, don't buy long term, I'm not sure. It just doesn't seem to have a easy to discern value at the moment, and that worries me.
Thanks a lot, Mark. So, and guys, if you really want to check out that article that's coming by Rob Rose, that will be live on businesslive.co.za, if I'm not mistaken. Don't forget, they do have a 10 Rand subscription going out. So for the first month, if you want to gain more knowledge on investment stocks and up your smarts, that's the place to go. And a lot of us are there. And you know what? A lot of people have been asking about this thing that Kalo loves, as well as we call Mark the OG of this sector or these shares, and those are penny stocks. And we just got a question now. What penny stocks are you guys looking at? In 10 seconds, Kalo, what penny stocks are you looking at? Kalo, you're on mute.
Yes, can you hear me now?
Yeah, we can.
I think you need to give me a number as to how many stocks you actually want.
Let's go. You know you love penny stocks. 3 penny stocks that's for 2022.
Okay, three penny stocks. Off the back of my hand, I'll go for Orion. Orion is one of them. Jubilee is one of them. And then one of the most riskiest one for me personally is Ascendis Health. That's the last one.
So we got your top 3, Kalo, and we'll hand it over to the OG Mark himself. What are your top 3 for 2022?
I hate to admit, so I'm embarrassingly light on penny stocks at the moment. But what I do have, and what I kind of add to now and again, and I'm watching the progress of, and I think it's super high risk, so please be careful, is Core Potash. It's in the Republic of the Congo. It reminds me a little bit of Alphamin in a way. I don't think might not pan out the same way, but that's my little optionality on my retirement, I suppose.
Wow. And Julieta, do you dabble in a bit of penny stocks or not your flavor?
No, I'm sort of interested in them. Jubilee actually would have been. I would also pick Jubilee. I think they're interesting. They're an unsung company. Quite a lot depends on, I suppose, PGM stuff. What else? What else did I think recently, Chish, that I would be keen on? Oh man, yeah, off the top of my head. And I suppose they're no longer penny stock. Jubilee definitely is one that I would be interested in.
Okay, awesome, guys. And I think we don't have time for any more questions. And it was so great having the big shots at Financial Mail, as well as Kalo, the co-host. Guys, I see that you are talking about a WhatsApp group, and we love it when you guys come together and talk about investing and helping each other out with education. But remember, be careful of the scammers out there and the fraudsters. I will never ask you to send us money, or if anyone sends you money or works on behalf of EasyEquities and is asking you for 10,000 Rand or 5,000 Rand, that is a lie. We do not do that. We don't have ambassadors asking people for money, nor do we have advisors as well. So on that point, remember, if you're looking for any more information on EasyEquities, please go through to our support portal, which has all the FAQs for you that you need, as well as a research portal. If you want to check out more research on these stocks, you can go to Business Live as well. They've got tons of information on stocks. And then if you just want the education and the 101s, you can go to the Easy Does It podcast, which is available on all streaming sites, Apple Podcasts, as well as Spotify. So you can check that out. And our YouTube page, our social media pages, we everywhere, literally, guys. And if you're a newbie, check out our blog portal. Our blog portal has amazing content for you if you're a beginner, from the beginning all the way to the end. And if you feel like the blogs aren't helping you, check out the Easy Academy, which is literally an academy for beginner investors, and you graduate to becoming an advanced investor, and hopefully that helps you. And I think I've hit the nail on the head there. Guys, thank you so much for joining us. Investors, thank you so much for taking the time this afternoon to join us. Be safe out there and see you soon.
Thank you. Bye-bye.
Thank you.
So easy.